Ever wonder when Tesla stock will be accessible and affordable for the majority of retail investors, despite the fact that the industry leader is continuously beset by problems as longtime Tesla supporters and opponents point out left and right? ARK Invest believes Tesla will continue to lead the electric vehicle market, especially if the company is the first to successfully implement autonomous driving in the United States. She stated, "We're beginning to believe that not only will Tesla take the biggest share of the electric vehicle market, we also believe that it could take 20 to 25% share of the total auto market in 5 years, that is by 2026. Bears experts predict that Tesla stock will continue to soar to incredible heights. You definitely don't want to miss this one. Founded by Cathie Wood, ARK Investment Management LLC, also known as ARK Invest, is an American investment management company that oversees a number of actively managed exchange-traded funds. ARK Invest provides investment options to investors looking for long-term success in the public markets with a singular concentration on disruptive innovation. Wood is the creator, CEO, and CIO of ARK Invest, a corporation with assets over $60 billion that makes investments in cutting-edge technologies like genomics and self-driving cars. Wood is regarded as a star investor in ARK's 2021 open source and is frequently referred to as the most underappreciated investor. Model Tesla, the company stated that it expects its share price to reach $3,000 in 2025. As of right now, Tesla is hailed as the most valuable automotive company in the world, with a valuation of over $700 billion. However, Cathie Wood and ARK Invest have since updated this stance due to material changes, including autonomous ride-hail assumptions and inputs and capital efficiency estimates. Musk, the CEO of Tesla Incorporated, stated through his employees that he agreed with Wood when she stated that Tesla is worth $3,000 per share if they perform well. Musk further explained that if the company executes well and indeed will have a price tag of $3,000 per share, making it the world's most valuable company. Based on their analysis of consumers' perceived value of time, ARK Invest's updated model shows updated assumptions for the total market for autonomous ride-hail at each price point and the likelihood that Tesla will solve for fully autonomous driving. They anticipate higher demand for autonomous ride-hail at higher price points than they did in their original model. In line with the revised model, ARK determined that there is a 25% chance that, in a negative scenario, Tesla shares will be worth $2,900 in 2026, and in a bullish situation, $5,800. ARK established a price objective of $4,600 for Tesla by that year. The typical American will not be able to own Tesla shares. Only the wealthiest will have access to it. Tesla has reduced its capital investment per additional unit of capacity from $84,000 to $700. In 2025, ARK anticipated that Tesla would pay $6,000 to $8,000 for each additional unit of capacity. However, as of right now, the company projects that it will only spend $2,000 to $7,000 for the same capacity in 2026. Visit Moomoo to predict the precise performance of Tesla stock. Link in the bio. Per ARK Invest approximately 60% of the projected value and over 50% of the anticipated EBITDA, or earnings before interest, taxes, depreciation, and amortization, in 2026 will come from Tesla's potential robotic taxi business line. Although at much lower margins than the robotaxi, they predict that electric vehicles would account for 57% of the company's revenue in 2026 across the simulation set. Although they previously believed that Tesla would never be able to introduce autonomous ride-hailing, recent encouraging developments have led ARK to become more confident in Tesla's capacity to accomplish full self-driving. Therefore, revenue, they decided to assume its introduction in 2026 after changing their minds due to Tesla's innovations. However, in 9% of their model cases, Tesla does not commercialize robot taxis within the 5-year window if and only if robot taxis commercialize within the forecast window. Musk also predicted that Tesla would commercialize autonomous ride-hail in 2024, 4 years later than he did. If Tesla successfully launches robot taxis by 2026, the expected value is the average of all 1 million simulations. These simulations are highly sensitive to the year when Tesla finally launches robot taxis in the majority of ARK's lowest price per share scenarios. As a result, financial results for Tesla are susceptible to the year of launch. While in other situations Tesla does not launch either service and the business has not publicly committed to delivering human-driven ride-hailing, in other scenarios Tesla launches a vertically integrated human-driven ride-hailing service, but does not create a robotaxi network. Before Tesla launches a fully autonomous service, ARK previously described the strategic and tactical benefits of doing so, emphasizing that it could turn into a lucrative recurring revenue stream. This is especially true in the event that Tesla launches a human-driven ride-hail service and finds a solution for fully autonomous driving. If ARK can't get a robo-taxi service up and running in 5 years, it figures that its human-driven ride-hail vehicles will eventually make the switch to the autonomous ride-hail network. While working toward complete autonomy, Tesla might introduce a human-driven ride-hailer car in ARK's many more expensive price per share possibilities. Tesla launches a robotaxi network in the next 2 to 3 years. In a published article, ARK Invest stated that although tuned to our expectation for 2026, we believe our Tesla model is methodologically conservative. We assume that Tesla's stock will trade like a mature company rather than a high-growth one in 2026, although Tesla's stock reached an all-time high of 414.50 several months ago, the amount adjusted for its recent 3-for-1 stock split. It has since declined by more than half and touched a new 52-week low of 204.16 in the past week amid a slowing economy. Still, Tesla holds plenty of promise as a business, especially over the long term. Tesla's valuation is often the source of fierce debate on Wall Street. The company is worth about $680 billion, which means it's 14 times the size of Ford Motor Company, for example. Tesla has a discernible first mover's advantage in the electric vehicle space, with an annual production capacity of 2 million units, already a level Ford doesn't expect to reach until 2026. The company's most significant rivals, such as Volkswagen Corp., are envious of its inventive manufacturing technique. Claiming Tesla is the benchmark in that area is Tesla's higher automotive gross profit margin than any other automaker, with a recent third quarter 2022 gross profit margin of 27.9%. A more efficient production process results in cheaper expenses and greater profit. Additionally, Tesla is a leader in self-driving software technology. According to some estimates, the market for this technology could be worth over $2.1 trillion by 2030. The company's fully autonomous robotaxi is scheduled for release in 2024, which could allow it to reclaim the lead in this market. Other automakers may find it more difficult to catch up with this technology because it requires years' worth of real-world data. In addition, Tesla operates other businesses, such as the generation and storage of solar power for homes, for which demand is so great that the company is finding it difficult to meet supply. This year, at Tesla's AI Day, the company unveiled Optimus, a new humanoid robot that, despite its many problems and obstacles, has the potential to completely transform the workforce. 2022 has been a huge year for Tesla, as the company opened 2 brand new gigafactories in Texas and Germany, doubling its previous yearly production capacity of 1.05 million electric vehicles to 2 million. In fact, Tesla CEO Elon Musk stated that the company aims to produce 20 million cars annually by 2030 from as many as 12 additional gigafactories. Additionally, the company is entering the robo-taxi business, which has the potential to completely transform the logistics industry and change how people move around. Wall Street analysts estimate that Tesla will make roughly $120 billion in sales by 2023. Experts also estimate that the EV manufacturer would probably produce 2 million cars annually, so assuming that production estimate is accurate increases tenfold if this occurs, Tesla's yearly revenue might surpass $1 trillion by 2030, assuming that car prices stay at current levels. Given the plethora of opportunities this company could uncover over the next 10 years, it is short-sighted to focus on what might happen in the next few months or even the next year. As a result, experts believe that investors should consider taking advantage of the dip in Tesla stock, regardless of the current state of the economy and shaky stock market. Tesla stock has already dropped 41 years to date. For more content on Tesla stocks, please subscribe to our channel.